Welcome to Alpha Wolf Trading. Did you know that there's over 12,000 stocks or companies that trade on the OTC? Between the NASDAQ and the New York Stock Exchange, you have over 7,000 companies. But us as retail investors, we wouldn't know that unless we were researching. Because why? Wall Street focuses on the elite, the big companies. And where the retail investor has their advantage is in small and micro-cap stocks. Why? Because you have the opportunity to speak directly with leadership. That is what this is all about here at Alpha Wolf Trading. We're trying to find the hidden gems, and we interview the executive teams of companies that we think meet the parameters to be those hidden gems. I also want to make sure you understand that this is not a paid-for promotion. I collect no compensation for the interviews I do here. These companies that I interview have been identified as potential opportunities for me and the members of Alpha Wolf Trading to receive a higher than average return on our investment. These companies I have identified either because of a technical setup on a chart, a fundamental change within the organization, new management team, new products, all kinds of different things that actually lead me here. But what do I think is the most important? Leadership. And that is why I do these interviews. I want to understand what drives the person that is leading the charge. I want to feel their passion. I want to understand their vision and the strategy that they're going to use to achieve success. That is what these interviews are for. I want to understand the share structure and the cap table, the size of the TAM, the total addressable market. This is the opportunity to learn all of those things. So sit back and enjoy. And if you learn anything from today's interview, do us a favor. Subscribe to the Alpha Wolf Trading YouTube channel. Today's interview is for educational and entertainment purposes only. Please do not take this as investment advice. Do your own due diligence before investing in any security. Hey everybody, Tim from Alpha Wolf Trading coming at you with another CEO exclusive interview here with Robert Hayes from Sharps Technologies, ticker symbol STSS, traded on the NASDAQ. Robert, first, let me thank you for coming in and telling us your story.
Thanks, Tim, for having me.
All right, so STSS, Sharps Technology, in a just a real quick, what does Sharps Technology do?
So Sharps Technology is a specialized drug delivery company that produces syringes in the smart safety syringe space, along with the pre-fillable syringe space. So we focus on bringing innovation to the market to help customers solve problems that the standard industry products cannot. So it's a pretty exciting space for us. It's going to be an opportunity for us to carve out what I consider to be a niche opportunity in each of the different areas, and be glad to share some information around the technology with you.
All right, so you're not the first company that's come out with a safety syringe, right?
Right.
That differentiates Sharp Technology from, and first of all, before we even go there, Robert, before we go there, just hold on to that thought. Give us some background on you. How did you wind up at Sharps Technology?
Yeah, sure. So I've got more than 25 years in the healthcare space, working for medical device companies, pharmaceutical companies, and in specialized packaging. And so I got an introduction to the founders of Sharps Technology back in 2019. They were bringing some new innovation to the market. They had it developed in concept for the disposable smart safety syringe space, but they were targeting customers that worked in pre-fillable syringes. And those were products that my company that I worked for previously made and sold. So they asked us to look at their technology, to give them feedback. I led the innovation and product management space for those specialized products at my previous company. And so we spent about 12 months working with them we developed some early concept parts and prototype parts for them and established a partnership and showed the founders of the company that we could help them co-manufacture a pre-fillable syringe. And so through that work, I learned a lot about the technology, about what the goals were for the company, and saw some immediate opportunities. And so I worked with some of my customer contacts to get some of the technology approved early on. So, Pfizer was a company that looked at the smart safety syringe technology with our Provensa product. They loved the combination of passive safety with ultra-low waste, along with the reuse prevention. And in about 6 weeks, we had the product approved at Pfizer. And so we continue to work on the pre-fillable syringe concept, and the founders were pretty happy with the work that I was doing to help them with my team. And then we started talking about the bigger opportunities for me to come over and be part of Sharps and lead it going forward to help them, move into the manufacturing space and then commercialize some of their technology that they have patents around, and then start to generate revenue through direct sales to pharmaceutical and healthcare companies. So I joined in late 21, and then kind of started leading the company with the direction in early mid 22 with the IPO, and then the work around the negotiations with Nephron, one of our key customers and key partners in the space that we're working with now, and then helped get the facility off the ground in Hungary that we purchased post IPO. So, my background is heavy into manufacturing, regulatory quality, along with innovation. Spent a lot of time making and selling products to large pharmaceutical customers, all the top customers that you can think of. I've either worked with directly or supported indirectly, have very strong relationships in the space, and know the competition really well in the space. Worked for many of the competitors that I'm going to work against now, so know their strengths and weaknesses. So it's going to be exciting for us. Have had a lot of opportunities with previous partnerships and employees that I've worked with that have shown interest to come over and be part of Sharps. And so as we have opportunities to bring them on board, we're doing so, and they're making great contributions to help us move forward.
So, I mean, kind of a tough time to start a business, right? Just coming out of COVID, and then supply chain issues, but supply chain issues actually kind of the COVID thing actually is part of the reason you got the Nephros deal, right? I mean, because they were having a difficult time getting syringes.
They were. I mean, the supply chain issues that came out of the pandemic and other challenges globally really affected a lot of the U.S. customers that were buying products from overseas or third world countries. So, the partnership with Nephron that recently started for us, maybe 10, 12 months ago, was around their Inject-EZ operation in South Carolina. They had previously been buying syringes from large suppliers overseas, and then through the pandemic and what took place as part of that, their supply chain was more or less disrupted and or cut off, and so they were almost forced to become a self-supplier of key packaging components, including syringes. So they invested their own money to do a small manufacturing site in South Carolina to supply pre-fillable syringes. And as the plant started moving forward, they were looking for a partner to help them with the technical aspects of the plant to commercialize the products and then bring that forward. And that's when we got the introduction to Bill and Lou Kennedy, who own Nephron Pharmaceuticals, who's a privately held pharmaceutical filler and 503B and contract manufacturer here in the United States.
Yeah, so just so people understand, this is not just your local small compound manufacturer. This is a massive facility that has got robotics, and this is no joke of a company here, right? This is a big player.
It's a big player. The 503B space and the pharmaceutical filling for generic drugs is a big part of what they do. And they, do it well. So the facility there is probably somewhere upwards of 900,000, square feet, close to 1 million square feet. A very diverse operation, very specialized, a lot of expertise in the operation, very serious player in the 503B space, supply, hundreds of products to the market, have more than 3,000 customers. A lot of people don't really understand, the size and significance of that company in the area, but they're going to be a company that continues to grow, continues to add value to the healthcare space. They have a lot of strategic relationships with key healthcare companies across the United States. They're one of the leaders, not just in the United States, but I would say globally, for what they do. So Bill and Lou Kennedy have done a nice job of building their business. Again, it's privately held. They can execute against a lot of opportunities in the market that may be more challenging for public companies, but Bill and Lou Kennedy are continuing to be successful with the things that they do, and we're fortunate to be a part of the relationship with them and helping them move forward with the supply of prefillable syringes.
So let's I hate to skip forward, but we're there, so we might as well. Let's talk about the partnership and the relationship with Nephron.
Yeah, so like I said, I joined in 21. We took the company public. We were very focused on the disposable smart safety syringe space. And so really, I would say 22 was about getting the facility in Europe operational, to have a plan to do so and target the right products. And once we executed against the initial models there, we started looking for opportunities here in the United States. And we got an introduction through a joint relationship to Nephron. I met with Bill and Lou Kennedy, spent a lot of time with them around what they were doing with their business and what their strategy was for their Inject-Easy syringe plant. And so we negotiated really a multi-point agreement that included co-manufacturing at the time. It included sales and distribution. It included the opportunity for expansion. It included the opportunity to develop new products for Nephron called the pharma services segment. But the co-manufacturing agreement was the one that was strategic for us, because the opportunity to work with the team at Nephron at the Inject-Easy site, we were going to provide and are providing the technical support for the facility to help run it, and then they would provide the operational team to execute. And then as part of that, we would make the syringes that they were going to use as part of their operation, the prefillable copolymer syringes. And then we would have the opportunity to use the rest of the manufacturing capacity to produce products that we wanted to bring to market. And so that co-manufacturing agreement actually evolved into where we are today with the deal that we announced in late September to purchase the Inject-Easy facility. And then with that purchase of the Inject-Easy operation, Nephron was willing to commit 10 years of supply for product to us through an exclusive agreement that will bring guaranteed revenue for the next 10 years for us.
Right out of the chute.
Right out of the chute. Yeah, that's exciting. Yeah.
Yeah, that doesn't hurt.
Yeah. Well, we're pre-revenue. I mean, we've got some interesting opportunities with large companies for the disposable smart safety syringe, and we like those products. But to move into the prefillable space for drug delivery technology like these syringes, like you can imagine, the revenue side, the margin side of the business is much, much better. The copolymer configuration provides lots of opportunities for us in the market against the standard products that are out there. And so, we can talk about that, but the plan from Nephron for Sharps is, they're committing a purchase order for $30 million to us when we close the deal. So the first 12 months will be worth more than $30 million to us in sales. You're looking at margins of 50 to 70% for those products. And then really the business grows from there to upwards of 45 million a year, beginning in year two through year 10. So, I mean, you can do the math on that. And so for us, going from pre-revenue to these types of numbers is pretty impressive. But even the better part is that Nephron's going to use about 40% of the capacity in the facility, and then we'll have the opportunity to sell the remaining capacity to outside customers that compete both in the 503B space and the generic drug filling space, which is exciting for us.
It's extremely exciting. I mean, this is the stock is not reflecting the deal that you have managed to put together, but this is you are, what I've learned from you, we've only met once, but you're a relationship guy, right? You
Yep.
build relationships over, and I'm gonna assume, I mean, you were able to build this relationship with Nephron in a very short period of time, in my view. And you've been in this business for how many years? 25 years?
Yeah, I've been in 25, and I learned a lot from the customer side and working with customers and the opportunities that I've had. So I would say my work career is a little bit unique, and have had the opportunities to, like I said, work with most of the top companies in the world that are in the healthcare space. So I've had the opportunity to see how great leadership works. I've had the opportunity to see how not so great leadership works. So there's always things to learn, right, about how you work with people and how you work with customers. And so I think it was a lot of that foundation that allowed me to come over to Sharps and quickly build a relationship with Bill and Lou, because they're no nonsense, high energy people from the standpoint of what they want to do. And they are very serious players in the space, and they want their partners and their suppliers to be able to support them. And that was the commitment we made, was about making Nephron successful, and as part of that deal, having Nephron reach out and be able to support our business as we try to get it off the ground. So Sharps is a small company. We're in a really specialized space. Not too many people know much about it. I think people have been waiting for us to have a strategy that we could communicate out to the market. And so, we've been working on this deal, like I told you, for probably upwards of 6 to 8 months, and been working on a plan to make it come together. And so I think, now's the time to really try to kind of share the message and kind of what our thinking is and how we're moving forward. But, a lot of investors that I talk to on a regular basis have been asking, in the recent past, what's our plan for revenue? How are we gonna grow the business? And so, the opportunity to partner with Nephron, and we've already talked about them, is significant. And these are once in a company's lifespan type opportunities to get a 10-year supply agreement worth more than 400 million. You don't see these types of opportunities very often.
So just to emphasize that, the typical long-term contract would be 5 years.
Yeah, I mean, in the industry space that I have worked in, you would see it for anywhere from a year to 3 years. And typically that relationship would be split with different suppliers. And so, the big branded pharma and the biotechs are very careful around how they put contracts out there. So, I've seen them up to 5 years. But usually there's some restrictive performance criteria when you start getting in the out years, because it's not very predictable sometimes for people's business. And so, when customers commit to volume from their supplier, they have to be assured, what's going to take place and how the business is going to grow. And sometimes products have a lifespan that's not easily understood in the beginning. And so, for Nephron, what's great, what's different for them is they have made the decision to standardize a lot of their specialized packaging needs, not so much from the technology, but from the formats. And so for us, Nephron might have, several a dozen drugs up to a couple hundred drugs that they are either in syringes now or going to be moving into syringes. And so we can work with Nephron to configure what we call specialized technology in the prefillable space, where, as an example, the 10 ml format is a very common format for them. We can set that up to be able to support all or most of those drugs in a way where it makes it very easy for us to produce and very effective for Nephron to use, and help them actually gain output from their filling lines, which they might not normally see.
So when we spoke, one of the things about your syringe, and you gave me the example of during COVID, you had the between Pfizer and what was
Moderna.
Moderna,
Yeah.
right? The vials that they send out were actually with 7 doses or so.
Yeah, they were overfilled to accommodate for the waste, for the standard syringes that were set up to be used with those therapies and treatments during the pandemic. So, I mean, to clarify that, and this is an area where a lot of people, don't understand the need for better technology in the drug delivery space. The U.S. market has come a long way in regards to safety. So you see a lot of active safety systems or passive, not so many passive, but there's a few out there, and that's part of our marketing strategy for some of our technology. But the combination of different safety mechanisms has grown in the healthcare sector to prevent infection and the spreading of potential disease. But one of the learning points for a lot of people in the healthcare space during the pandemic was around waste. And so most syringe products are not designed to be efficient from the standpoint of the amount of medication that they draw into the syringe and then how much goes out through the actual injection. And so a lot of standard syringes, and we've done a lot of research across the market, on average will waste, upwards of 100 microliters of product per injection. And so, when the pandemic was going on, the realization by Pfizer for some of this, and it's well understood on the pharmaceutical space, that they have to overfill a lot of times on the multi-dose vials. The Pfizer 5 ml vial for COVID actually had to be loaded with the equivalent of more than 7 injections. And so as you start to think about that, the vial and the usage of the drug to help people that needed that therapy, as it was understood at the time, you were wasting 2 injections for every 5. So if you think about that, that's upwards of a 40% waste. People started to pay attention to that, and where they could, they started, going after what are called low waste syringes, which allowed them to get 6 doses out of the 5-dose vial and only waste 1. But a lot of our technology is considered what we call ultra-low waste, and allows us to fully utilize, in that particular case, 7 doses from the 5-dose vial, knowing it was loaded with 7 doses. So Pfizer was paid upwards of $20 an injection. And so, when you're doing 5 per vial, but you have 7 in there, they're getting around $100 at the time for the vial, but throwing away $40. But more importantly, people that needed the therapy weren't able to get it. So say what you want to say about the pandemic and the recent COVID thing, but when you're in a situation where you have a global event like this, so let's just, I know I don't want to talk about it, but there will be another one, whether it's regional or global, within the next 5 to 10 years. The development of the therapy and the treatment is one thing. Making enough of it for the people that need it is another thing. And then effectively getting it to the people is still, an additional complication. So to be able to make enough and get it to the people efficiently was really the lesson learned by a lot of people, a lot of healthcare companies, during the pandemic. And so the new interest in ultra low waste and waste technology for disposable syringes is creating an opportunity for us with our technology. And then our ability to carry those design features over to our prefillable syringes will help us to bring business to Sharps for pharmaceutical and healthcare companies that want to be much more efficient around how they directly load the vaccine or the therapy into what's called a prefillable syringe. So ultra low waste technology was really brought to the forefront as part of the pandemic, and people learned a lot about it. And it's a good thing. I think it's really going to help the market. It'll eliminate a lot of waste and hopefully drive down costs for some of these products, because healthcare companies have to plan for that. There's no guarantee on what type of syringe will be used when it's put into a multi-dose vial. So you have to plan for that waste.
So the copolymer, right?
Yep.
What are most syringes made of? Glass?
Yeah, so in the disposable space, it's typically a polypropylene plastic material. You can see derivative materials depending on what needs to be done, but in the prefillable space, which is what we're going to focus on a lot today because of where we're going with the business, the copolymer is really an advanced plastic material. It's been on the market for a little bit of time relative to glass. Historically, type 1 borosilicate glass has been the standard for prefillable syringes. It's a great material, a lot of knowledge around that material. My past companies made syringes with type 1 borosilicate glass, but borosilicate glass is a very difficult material to work with. The converting of raw materials to make glass and then convert it into syringes is a very, what I would call, industrial process. It's a very dirty process from the standpoint of converting the glass, because you have to heat it, cool it. There's lubricants, there's tools and dyes that come in contact with the material. And then there's an extensive cleaning preparation process to get it ready for final use. So there's a lot of cost, a lot of challenges with glass, and there's limitations from the standpoint of glass, from the standpoint of sizes of syringe that can be made. The features and benefits that you can actually build into glass is more challenging just because of the limitation around the manufacturing process. And not a lot of people understand it, but when you get into the converting process for tubular glass, which is the base process for making glass syringes, it's really as much art as it is science. And so having experienced technical people to be able to make certain products consistently is a challenge in the industry. And it takes many years of training and a lot of work to become an expert in that space. With copolymer syringes, we're able to, work with material and that basically is clear like glass. It has a high level of transparency. It's very compatible with a lot of the industry standard rubber components. It's very friendly from the standpoint of working with medical grade silicone to help with activation forces. And then for customers that want to move away from silicone and go with silicone-free products, it's very friendly with those types of other components. But it's very lightweight and highly break resistant compared to glass also. So, we talked about the glass and the challenges with converting and the industrial process. It's technically a very dirty process, but with injection molding and clean room manufacturing and assembly, the copolymer products can be designed in such a way where they're much cleaner. You can make a broader range of size and format configurations much more easily than glass. So, we see a huge opportunity to move into this space, because we can make, products that are much more consistent, piece to piece, and so less variation, which creates opportunities for customers to run them more efficiently on their manufacturing line. And then the technology is continuing to advance where you can effectively validate the manufacturing process for these products at a much higher level than you can with glass. And so, glass is going to have its place. It's a great material. I love pharmaceutical glass products. I've made them all my life, but when you start looking at, the advantages of other materials out there, the copolymer, specialized syringes and products definitely have their place. And you see a lot of customers starting to express interest in their capabilities.
All right, so let's talk about where the company is at from a balance sheet and shares outstanding, and let's go into some of the specifics there.
Yeah, so we're a very small company. We're still pre-revenue. That's the significance of what we're trying to do with this deal is pull revenue forward. We have about 41 million diluted shares outstanding with the recent raise we did through Aegis. And so, the opportunity for us to work with Aegis, some love it, some don't, and I get it. But the reality is they've been very helpful for us to bring the company public, and they're helping us create the runway to move forward with these types of transactions for us. So, the reality is, we're a micro cap, we're not well understood. We're in the healthcare space, which I think sets us up for a lot of long-term opportunities. Healthcare products, healthcare industry is considered a high growth space relative to many other sectors in the manufacturing world. And so people are always going to need medications and treatments and therapies, either to save lives or to make lives better. And, that was my commitment I made, many years ago when I chose to get into the healthcare space. It's, I wanted to make better products to change people's lives and make it better for them and to try to improve the quality of life. But, to get back to where, you were taking us, again, microcap, we've got about 41 million diluted shares. I think we're sitting around 50 cents right now. A lot of people are waiting on us to bring revenue to the table. So we announced the transaction because we signed critical documents a few weeks ago. So I think, a lot of people are kind of watching it on the sidelines, not really understanding it and what we're going to do and how we're going to do it. But, the opportunity here to partner with Nephron can't be overlooked. And the opportunity to have revenue, significant revenue for us in the next few years and going out 10 years can't be overlooked. So we're excited about the future of the company. We're going to execute against our plan. And I think the stock will take care of itself.
I think what you've got here with Nephron is what I would like to call a win-win situation, right? They needed somebody. They put together this facility because of inefficiencies within the system that made them look bad to their customers, right? So yeah, they needed somebody to come in and be able to. That's not their business. Their business is not to be a manufacturer of syringes, right?
Yeah, I mean that's exactly right. They recognize their strengths. They recognize their weaknesses. They only did that to help them be successful with the fill finish part of the business. And so, when you look at how all this is lined up, with what they did, how far they got, the opportunity we're going to get to buy the facility really at almost cost. I mean, it's too good of an opportunity. I mean, we were looking at through the co-manufacturing agreement to potentially buy the facility 2-3 years out, but when Bill Kennedy asked us to look at it sooner and potentially focus on making products for them to help them execute against their fill finish work for critical drug supply items for the FDA, it was too good of an opportunity to pass up. I mean, for us to be able to step in and help a customer like this right out of the box and have U.S. manufacturing capacity, it's a great opportunity for us.
I mean, if you think about it, it's phenomenal because you don't get entrenched. That becomes a very sticky relationship, I would think, moving forward, right?
It can be. I mean, that's where I think the other part of the message, and your point's a good one. I've been part of several joint ventures in my past life with previous companies, and it can be very challenging. But in this particular case, Bill and I spent a lot of time together at his site talking about how we wanted to work together. And, my commitment to him was, we would do whatever we could to help his business be successful. And in return, he would support Sharps. So, when you look at it, this relationship is really, collaborative at a high level. Previous joint ventures and other type of agreements that I've been a part of, the companies kind of worked in the same space. And so it would be very challenging from the standpoint of making sure that everybody was playing nicely in the sandbox, to give you an analogy. Where this case, we're working together. Bill needs the syringes to grow his business. I want to make him syringes to grow our business. He's already designed into the products pretty much what he needs. We're really good at making syringes. All the equipment's there. We would need to help him get started with production in early 24. And then, for us to get the operation really at cost, once we turn that facility on and we start making product and shipping product, I mean, how it works. The valuation of those assets is just going to go up for us
instantaneously, right? And if you would have gone a different route, I mean, it could have been a very different scenario, right? You could have a much longer time frame of actually getting to the point where you can produce product, right?
Yeah, exactly. I mean, fortunately for me, I've been through this in different ways. A greenfield is where a company will come in and build a brand new facility in a new area, not necessarily having a lot of business tied to it yet. And so they need to build the facility and at the same time try to get customers to qualify that site. Sometimes when you do a brownfield, you actually buy a facility away from a competitor or someone in the industry, primarily to capture the customer base. And there's always a lot of challenges with matching up the technology between the parent company and the new acquisition. But in this case, we really have the best of both. You have a very large customer who kind of dominates their space. They have a high need for specialized packaging. They've built the facility really to support their business. Everything's there. So the critical customer is already identified and they're willing to commit 10 years of supply. And the facility for making the syringes is strategically located. It's 2 miles down the road from Nephron. So in this case, getting it relatively at cost, having a critical customer, the product specifications are clearly defined, the technology's there. It's more or less state of the art, and we're looking for an opportunity to produce here in the States. And the facility, we haven't talked about it yet, but the facility is actually expandable under roof. So the footprint can be almost doubled under the roof that is already there. So the 45 million can easily become 90 million as we grow the business without needing to expand. So, when you look at these products and the revenue, that they create, but what's more exciting is the margins. I mean, you're looking at 40, 50%, sometimes higher on the smaller side for gross margin. And when you get to the bigger sizes, you're 70, 80% gross margin. And so, this is what's exciting for me, is not only having the revenue and the partnership that's going to be, really transformative, but yet collaborative at the same time. But the opportunity to bring money to the bottom line, right away is going to be helpful. I mean, no doubt 24 is going to be a challenge for us, but to have this opportunity to have a second facility, now one in the United States, one in Hungary, we have a lot of technology that's needed in the marketplace. And now it's really, a matter of executing against the plan that we've kind of put before ourselves.
So the facility in Hungary, is that at capacity? Where is that at?
So the facility that we purchased in 22 has a initial capacity of about 45 to 50 million units. We're ramping that facility up in phases to make initial quantities of product to sell in Europe and the United States. But the facility can easily be expanded upwards of 200 to 250 million units. So as we grow that business and focus on the strategy for those products, that facility can easily be expanded without actually expanding the footprint either. So the nice thing is we have room to grow for both products, as far as both product platforms, and then be able to service our customers.
Okay, so what are you excited about for the next 6 to 12 months? I mean, where do you see where do you see or what do you see as a catalyst in the next 6 to 12?
Well, for us, we got to close the deal on the purchase related to the asset agreement with Nephron, with Bill and Lou Kennedy, and then we need to execute against the startup of the facility and begin to make and ship products per plan. So as we work through the closing, the timing of that closing will affect how soon we can start to make and ship product, because there is some work to do. But the leadership team for that facility is more or less been already identified. I have people that will be coming over to help us. I've got people already there on the ground helping me do work. We've got commitment from Nephron to help us identify key, what I would call technical people to be able to support the business. We have contacts also to do the same. And then it's a planned strategy to ramp up the facility. So for us, 24 will all be about making product for Nephron and executing against the $30 million PO. And then, once we're through 24, it's all real upside from there, because we'll have a run rate, we'll have experience with the technology that the Bill and Lou Kennedy purchased, that will make us comfortable with expansion and growth quickly. And then, for us, we're already talking with customers that could be strategic for us in the pharmaceutical space, with products that will be made off our what we call small volume machine. So those are syringes in the 0.5 ml space to 1 ml space. And so for us, once we have Nephron comfortable with what we're supplying and we have the safety stock that they're going to need, the next thing is to identify one or two critical pharmaceutical customers to begin to build product and support projects for them. So, once we have the largest 503B locked down, then the goal for me is to build a similar type relationship with one of the top pharmaceutical companies for prefillable copolymer syringes for their business. And the nice thing is our board leadership co-chair Soren Christensen is not well known by many of the investors, but in the pharmaceutical healthcare space, he was a senior executive for Merck with operational responsibility in Europe, and a lot of the people he knows from his work experience are spread through the industry. So there's a lot of potential through Soren's contacts and through my personal contacts in the industry to help us pull forward one or two early projects on the pharmaceutical filling side for big pharma.
How do you feel about your level of staff for the kind of growth you want to try and achieve? You're going to need to hire salespeople. You're going to need to hire people that work for the plant. I mean, how much of a build do you think you have there?
Yeah, so the nice thing is, we have the core already identified. And so a lot of the people that I've brought over and that I'm planning to bring over, I've worked with before in different ways. And so, the people side of the business is really the most important for me. So it's great to have technology. It's great to have innovation in all of that and have great product designs. But what makes a company special or different is really the employees and the leadership. And so we've put a lot of thought into who's here, who's going to come over, and how we're going to do that work. So we've got a really nice plan set up to execute against for the leadership side. And then, like I mentioned to you, we'll do a phase startup for the facility in South Carolina from the standpoint of the middle management and then the operational team on the floor. And then, we'll identify the strong leaders in those different areas, and we'll have them become the training team for the next cell, the next cell, and the next cell. So the nice thing is Nephron kind of standardized some of the equipment, so the ramp up and the learning cycles for some of it will be pretty straightforward, which we're fortunate to have. But the expertise that we have here is second to none. I mean, we have people that have many years of experience in different ways in the packaging space and really the pharmaceutical space as well as the operational space. So, we're going to have 2, 3 plant managers working together, ex-plant managers working together to get that plant started up. We've got industry experts in product design and process design. And then we're fortunate to have really nice support from the vendors. So Husky and Han are two of the companies that are committed with their technology to the facility. And so we've been in early contact with them. They've actually reached out to me directly in relationship to the announcement in September about purchasing the facility, and they're excited to work with us. So, it's going to be a challenge. By no means it's going to be a challenge. Every plant startup is, but I think for us, we have a lot of people that have been through it. I've been a plant manager in my past. Justin Page, who's my VP of technical ops, has been a plant manager in his past. And then a couple of the other people we're going to bring over have also. So we plan on being able to support the business at all levels: regulatory, quality, product design, innovation, technical ops. And, we plan on being serious around bringing innovation to the market to help our customers, because that's really the focus for us. Is we want to provide better products to change people's lives, but also solve problems in the industry. We don't have plans to go head to head with a lot of the big suppliers. That's no good. I mean, they're really good at what they do, and I'm not taking anything away from them, but there's always an opportunity in this space to bring technology and innovation to the market to help it out and help it get better. And that's what people don't realize, is that this healthcare space and the growth and what's taken place over the last many years is unprecedented, and it's just going to continue to grow because of the needs for the global population are going to continue to be put on companies to supply better products and consistently support people to have a better quality of life.
And that's the number one goal. So that's why I love win-win-win scenarios, right? And to me, it looks like so far what you've been able to establish, you got a win-win with Nephron, right?
Yep.
And ultimately, who is going to benefit from that is going to be the patient eventually, right? So that's just a win-win-win across the board. What's your biggest fear right now? Do you have one?
Well, you always have fears, but I think for us, the having gone through this before, you try to be prepared as much as you can. We're inside the facility now doing a lot of due diligence on our side to understand where the equipment is and stuff. So I think for us, we want to be able to execute against the plan with a high level of success. There's going to be bumps in the road, but my biggest fear is that I don't want to get pulled in too many different directions where we lose focus. And so for us, the way we're planning it, and we're going to try to plan for it, is we're very focused on Nephron in year one, making sure we're successful there, and then we're going to create the win for them and for us, and then we'll move on to the next project. So some of this is going to be done in series, but there's ways to run projects in parallel to help set yourself up for the next success. So I think for us, my job is to enable my team, bring over the additional resources that we need, keep them focused, and allow them to have the resources that they need to execute, and then capture each win one at a time, and then bring in the revenue that's gonna drive money to the bottom line for shareholders. Because the shareholders that are hanging on to the stock and investing in the stock now, I want them to be rewarded for the work that they've done to support our company.
Speaking of that, is anybody I mean, it's probably tough for you because you have so many things going on. You got a lot of blackout periods where you probably can't actually buy the stock because you're working on stuff, right?
Right.
But when the opportunity does present itself, is there insiders buying in the open market?
Yeah, so they are part of what we've been working with as far as our legal team is, when are those windows when we can purchase stock. So obviously, if you look at my past, I was buying really at a steady state, for a period of time, and then I would have to stop when we were close to a project or a deal or something. And then, this one took a little bit more time than what I thought to get to this point. And so, a lot of us have been cleared now to start purchasing stock again. So you'll start to see insiders purchase. I plan on starting to purchase again. So the only reason I'm not purchasing on a regular basis typically is because we're working on a deal, and I've been advised to, protect the company and protect myself from the standpoint of just buying at the right time. So it's all good. We have a lot of people early on that invested when we were, just starting out, that have hung on to the stock. And so there's a lot of people that are, helping us, and then, waiting for us to bring the financial gains to the company so that everybody kind
What's
of
the
wins.
size of the TAM for this? Do you have a number on what the total addressable market is for what you're looking at going after?
As far as syringes,
Yeah, for the pre-filled. I mean, where you plan on focusing? How big of a market is that?
oh, it's huge. So it's in the billions. So when you look at pre-fillable syringes, I think some of the numbers, there's different people that run market analysis. So some of the stuff I've seen is, we're probably in the 8 to 10 billion dollar space now, and then upwards of 20 billion by 2027, with a growth rate of more than 10%. So that's just on the pre-fillable side. And, the specialized, copolymer and specialized plastic, it's got probably 25-30% of the market, and growing. And so, for us, with where we are and what we're planning on making, it's going to be super easy for us just to carve out a niche for us, and then, continue to grow. So, one thing I learned working for big companies, and I worked for several that were market leaders in their space, you can't service everybody. And if you think you can, you're wrong. And so there's always someone who's nipping at your heels, or that can steal a customer here and there because of your lack of ability or lack of attention to certain market needs. And so it was always easy for me when I was on the other side working for the smaller companies, but in the same area or industry of focus. We would just go in and steal customers left and right from the big people. And, the big people were focused on what they were focused on, but it's going to be the same way here. I mean, the big players in the space can't service everybody. And the funny part was Nephron got a big taste of that, when they were buying from overseas, and they were actually prepaying, Tim. They were prepaying for syringes by more than a year in advance, and the supplier still chose not to service them per the agreed to contract. And it was just crazy. I mean, how do you how do you how do you do that and then not have complications later? And that's what I'm saying. Some of these customers are, have high needs, high demands for what they buy, and the suppliers that are out there are not always customer focused or innovation focused. And, it's interesting to watch their models and what works and doesn't work, and having all the inside information more or less. And then, if I don't have it, somebody on my team does, to really understand how these other suppliers that I'm going to compete with think and operate, because it's fun to watch a little bit from the standpoint of learning from their mistakes or learning from their successes, and bringing over, what you can do to make your own company better.
So what I love about you, the first time we talked, and everybody that follows me knows that I think you can have a great service or a great product. If you don't have great leadership, I think the odds are stacked against you. right? And
Yep.
you Robert, you're a guy that immediately you gravitate to and you can rally behind, right? I love the fact that you said I've worked with great leaders and I've worked with not so great leaders, but you've learned from all of them,
Yep.
right? And that's the key is, what lessons do you take away from those experiences that help you become a better leader, right?
Yeah.
So this is your first foray as a publicly traded CEO, right?
It is. It is.
I don't think you came here to fail.
No, I didn't come here to fail. And I'm not your traditional CEO, you're right. But, I have to say I have a passion for what we do, and the board's been very supportive. And, I'm having a lot of fun, trying to put all this together for our company with the help of my team and people around us. So there's a lot of people
You
that are
just nailed that. You just said it isn't just you, it is the team. It's the team that you assemble around you, right?
Yep. Yep.
And you've got some relationships that you've established over 25 years. I'm sure you know who the players are and who you're going to work well with and who does what they do extremely well, right?
Yep.
I think this is a really exciting story. I think it's a very unique start because you've coming out of the gate with a big customer, right? And I would say that you have not been rewarded for anything that you've accomplished over the last 2 years, right?
No,
At
we
some
haven't.
point,
Yeah.
at some point, that will change. And my belief is, you know, the small microcap, you said it, microcap has been under pressure for 29 months.
Yeah.
And the biggest concern is, are you going to need to raise capital? Because if you're going to need to raise capital, the deals out there are absolutely horrendous, right? So that is the biggest concern. How do you feel? Do you feel as though you're going to have to go back to the capital markets to get the rest of this deal done, or how do you feel you're sitting there?
Yeah, so we're gonna focus on doing what's right for the company, as far as the capital markets are concerned. The opportunity here to get the facility at cost, the valuation it's going to bring to us once the plant's operational and we have sales. There's going to be some people that just say what they're going to say around what we're going to do, but we're going to try to leverage as much smart debt that we can that will still benefit the company to allow us to do the transaction the way that it should be done. But the reality is the planned financing for the facility will be in such a way that it will create a runway for us also to operate the business the first year, which is going to be critical for us. And so the plan is to focus on that, kind of how we've been communicated to the market already. But the only reason we would go back is if we have a commercial opportunity that would bring additional revenue or a strategic customer to us that would justify that investment. So we're not just going to arbitrarily go back to the market to get money for the sake of getting money. But the reality is, like there's times to get money and there's times not to get money. But if I can significantly add to the valuation of the company through a project for a customer or something we feel like we need to do, then we'll definitely look at it to see if it makes sense. But we're going to be smart and practical like we've been so far. I know people have responded different ways to what we've done, but when you move from an IP company only to a true manufacturing company, and you take a bite at the apple like we're going to do here with InjectEZ and Supply Nephron in South Carolina, it's a big step. It's a huge step, and something that a lot of people weren't expecting us to be able to do, and it's been a challenge for sure. But to answer your question, we're going to be smart about the money we raise, and I don't plan on doing anything foolish that's going to hurt the company. But we're going to do what we need to do to help make the company successful. And if we can enhance the valuation of the company through projects or commercial opportunities, and we need money to do that, we probably will.
All right. So just the one, this is going to be my last question, Robert.
Sure.
So right now you're sitting at what? We're sitting at about, what is it, 40 few cents or so?
Yeah, give or take. I think we're just under 50. Yep.
Yeah, 47 cents. So you got I'm sure you got the delisting notification from the NASDAQ, right?
Yep.
All right. So people are going to be concerned, is there a reverse split in the near future? Now, when you get a notification from the NASDAQ, you have 180 days to get the stock back above a buck for 10 consecutive days, right? And then if you don't succeed in that 180 days, you can file for an extension of another 180 days, right?
Right. Yep.
So really, we're talking 360 days is about what you're looking at. I think that there's enough happening there that you could probably get the stock back above a buck without having to do the reverse, right?
Right.
But nothing's guaranteed. So I'm sure all options are being reviewed, but it's a little early in the game to be saying that you're contemplating doing a reverse, I would think.
Yeah, we're not looking at that right now. We have some other plans to help us get there, and I'm working with our legal team to be able to be watchful of what we need to do. So I'm not a big fan of reverse splits, and I'm hoping with the announcement of the purchase and then the shipment of some of the first products will put us in a place where people will respond to the stock. Having a $30 million purchase order in hand when we close the deal, people should respond to that, and so the market should respond to that. So that's guaranteed revenue for us. Like I said, the facility is most of the way complete. Most of the technology is already there. We have to execute to finalize all of the work to be able to produce commercial product, but that's stuff my team's done before. But those big steps there, closing the deal, the purchase order, making product, will keep shareholders and investors up to date with information and investor letters to make sure everybody knows what's going on. But that's what I see, short term, from the standpoint of really the best path to create value and move the stock back above $1.
All right. So right on the screen next to me here, you can go to the ir.sharptechnology.com. You can sign up. I think you can sign up for investor alerts, right through the site there.
Yep.
Have things to, anytime you guys do a press release, gets sent directly to you. And Robert, if anybody has more questions or wants to get a little more detail, serious investor, I'm sure you'd be more than happy to speak with them.
Yeah, we use Redshift. We use Trade Digital to set up any of those direct calls as needed. And then there's a way to reach out for information through the website, for a general request. So we have people that watch that closely. So there's lots of ways. I'm on LinkedIn. There's lots of ways to reach out to me if people want to talk. And I try to be as responsive as I can in most situations. But I'm glad to do a follow-up with you, if it makes sense.
Yeah, actually, I was just going to say that. So when do you think, I think what's logical to me is once you close the deal,
right,
we should do a follow-up. Yes?
Yeah, I think that makes sense.
Okay. Robert, thank you so much for coming in. I think it's a great story. I think this is one. I'm not telling anybody to go out and buy the stock. It's not what I do. But what I can say is this. It looks to me like the stock is putting in a base. The sellers, I think, have gone. I think, you just said yourself, when you get the opportunity, you're going to be adding shares, and I'm sure others within the organization are going to be buying. That to me speaks volumes, right? When the management team is putting their money where their mouth is, that says something to me, because who knows more about the company than the people on the inside. And if you're buying in the open market, that is always something that resonates with me in a big way. It's not a guarantee that the stock is going to go higher, but to me, it tells me that management is in, they're in, right? They're all in. So I think the stock is basing here. you got to look at it and ask yourself, what's the risk reward? And my thought is, the risk is you lose 40 cents, and that's if you go bankrupt. I don't see that happening. I think this is a story that's just getting started. And I think the opportunity, I mean, how high has it been? When you guys IPO'd, you did what?
We were
Was
a few
that
dollars.
350?
Yeah.
350?
Yeah.
You know, stocks tend to go test previous highs. So it's you're going to have some resistance at that $1 mark. That's going to be a challenge. I'll tell you that right now, because everybody knows that once you close above it, right now the clock resets at the NASDAQ. So you'll have a challenge there. But I think like you said, you get everything, you execute with everything that you've said in a timely fashion. I think the stock will react. And keep in mind, people, the whole microcap space has a chart that looks like this. It's not just this company, it's the entire sector right now. So I don't think that's been going on for 29 months. And I think that has got to be closer to the end than it is to the beginning. So a lot of things that are happening. We've got the Fed, who I think is going to actually be done after maybe one more, maybe not even one more, might be done now. Coming into an election year, if he goes on pause for 12 months, I would say that would be a reason for the market to celebrate. So we'll see what happens, but I think this is a fantastic story. Robert, thanks again for taking the time, and we'll do it again real soon.
Thanks, Tim. Appreciate everything you've done.
All right, hold on one second. I'm going to turn this off.
Okay.
Hey there, thanks for tuning in and watching another CEO exclusive interview here at Alpha Wolf Trading. Today we had Robert Hayes from Sharps Technology Inc., ticker symbol STSS. I hope you enjoyed today's interview, and if you did, do us a favor, give us a like. How about giving us a share? And while you're at it, why not give us a follow? Until next time, stay safe. Alpha Wolf Trading wishing you the very best of success.